Now, people on variable mortgages are facing the prospect of paying potentially hundreds of pounds more each month if interest rates are to rise further to combat soaring inflation, as is widely expected. Those trying to get a mortgage are also likely to suffer as lenders have started pulling their best fixed rate deals after the pound fell to its lowest level against the dollar, following the government's announcements of tax cuts followed by borrowing. So what steps should homeowners, those trying to get on the housing ladder, and also renters be taking? Well, here to answer your questions are Laura Suter, who's Head of Personal Finance at the investment platform AJ Bell, and also Mark Saville, an independent mortgage advisor at Trusted Finance Advice. Thank you both so much for joining us. We've had quite a lot of people getting in touch with their questions. A lot of them about mortgages, obviously, and some about savings and personal finance as well. Mark, maybe come to you first, because I've got a couple of very specific ones about mortgages. Mike has been in touch. He says, we already have an agreed mortgage offer and are hoping to complete in the next month or two. Will the bank be able to withdraw this, or do they have to honour the mortgage offer?
That's a very, very good question that Mike has actually raised. The lenders have all said that the mortgage offers that they've issued so far will be honoured. I haven't seen any lender say anything different to that, and I would sincerely hope that that wouldn't change. I have actually been asked that very question this morning by some clients of mine already, and I've been able to assure them that the lenders are all saying so far, yes, we are going to honour mortgages that we've already offered.
Oh, so that kind of links into another one. Dom has been in touch. He's got a mortgage deal agreed. So it's not a new mortgage, but it's a deal that's been agreed that kicks in when his current mortgage ends in December. Equally, should he not be worried that the bank could withdraw it if it has been an agreed offer?
I mean, technically, the banks are free to decide if they want to withdraw mortgages. They tend not to want to do that because it's not good publicity for them at all. Definitely go and speak to your mortgage broker. Get your mortgage broker to speak to the lender and make sure that that lender is intending to offer those deals that have already been agreed. But as I say, the ones that I've looked at so far, when clients who are worried have actually approached me, the lenders have all been saying, yes, we're going to be offering the offers that we've already committed to.
OK, so that's quite positive. So it seems that if you have a deal that's agreed, you should be OK, but it's worth just going back and checking belts and braces.
Would always check.
Yeah. Laura, let's bring in you now. A more general question from Tom. He says, is now the right time to be selling your house? I mean, the market does seem to be quite fluctuating at the moment, doesn't it? But does this mean that it's a good time if you're thinking of selling?
I mean, it's always quite stressful selling a house or buying a property, and it feels even more so at the moment. I think there's a lot of nervousness about what the housing market's going to do, and people buying or selling now are worried about whether they're selling for the right price. But I think the advice is that it's kind of impossible to time the market. Even the experts don't manage to do it correctly all of the time. And so rather than trying to get your crystal ball out, I think you need to think about wider circumstances. Why are you selling? Is that the right move for you? And proceed with it if it is. I think if you're trying to time the market exactly to sell at the peak, then you're probably not going to be too successful in doing that.
It is. There are so many different circumstances, aren't there, that come into it when people think about selling that. Another one then, perhaps for you, Laura. This is from Elaine. And she says, should I use my savings to pay off my mortgage or sit tight and wait to see what happens with interest rates next year?
This is such an interesting one, and it's actually one I think a lot of people are going to be thinking about. When mortgage rates were rock bottom and pretty low, it didn't necessarily make sense to use that savings. Some people would have preferred to invest it and maybe got a better return, or just have it to one side. But if we're looking at the prospect of mortgage rates, I mean, they've already risen considerably and rising further from here. At the same time, while savings rates have risen, you're not getting a kind of inflation-beating return or anywhere near it on your savings. So at that point, that might tip the balance and make it look much more attractive to use some of that savings, if you've got it, to either pay down some of your mortgage debt or all of it. And I think people that have got a fixed rate that's coming up in a year or two's time, that are worried about perhaps being able to afford their mortgage if rates do rise a lot, it's worth thinking about whether you want to overpay by a little bit each month if you can afford to help try and eat away at that mortgage debt, so that when you do come to remortgage, the debt isn't quite so high, even if the interest rates are higher.
That's an interesting point, isn't it, Mark? Is that something you would recommend? I mean, would you say that now is a good time to be paying down your mortgage if you're in that glorious financial situation of being actually able to do that, when most people are just worried about actually meeting the payments as it is?
I'm sure everyone would love to be in a position where they could pay more. We always have the conversation with our clients about making overpayments on the mortgage. In the end, it means that you will pay less interest. And for many of our clients, it enables them to actually look at shortening the mortgage term, which is, for most people, exactly what they want to do. If you're looking at making an overpayment, then at least you then are going to benefit from a lower debt when you do come to remortgage in the future. So, yeah, we'd always recommend people to look at whether they should make overpayments on their mortgage if they've got the funds to do it.
Laura, back to you. A question from David. You were just talking about the banks passing on interest rates for savers. Well, of course, that doesn't seem to happen quite as quickly as the rates go up for mortgages, does it? David says, we hear a lot about the base rate rising and the high effect that this has on mortgage rates. But when will we see the bank's savings rates rise? And will it be proportional?
So we've already seen quite a lot of banks and building societies increase their interest rates. But I think what David's probably referring to is the money that he's got sitting in a savings account or a current account isn't earning any more than it was last year. And that's because to benefit from rising interest rates, you've really got to switch bank accounts. It's a much quicker process than it was before. But generally, if your money's been in an account or you're with one of the big high street banks and it's been in an account for a year or more, you're not going to be getting the best rate that you could. It's kind of those newcomer or challenger banks out there that really want your money and are offering you higher interest rates on your savings in return. So if you've got money that's sitting there that's not earning that much, then you need to switch it. At the moment, the best easy access savings account, so one that you can take money out of whenever you want to, is paying about 2%, just over that 2% mark. So if you're not getting that on your savings at the moment, then you should look to switch. But unfortunately, the way banks work, they don't just top up our savings accounts with better interest as and when the base rate rises. You kind of have to hunt out those better deals, which is a bit frustrating because, as you point out, on the kind of mortgage and debt side, they automatically raise those rates.
And in terms of switching, you know, people who may have savings, how relatively easy is it to do that? Laura?
So much easier than in the past. Previously, you had to fill out a lot of paperwork, often send off forms and proof of ID, for example. Now, a lot of these challenger banks and smaller banks, a lot of them are kind of app only on your phone. And I set one up the other week and it took me less than 5 minutes to set up the account. It's a case of filling in a few forms. Often you have to kind of send a picture or a video of yourself so you can prove you are who you say you are. But it's really very easy. And then, of course, transferring money between accounts is so much easier now. So for people that do have savings and want to get a better return on their money, they might find that in return for that 5 minutes of hassle, or even if it takes 10 minutes of hassle, setting up a new account and transferring their money, actually the additional return they're going to get could be pretty decent and make that 10 minutes worthwhile.
Yeah, it really could, couldn't it? Mark, we've had a question from Amir, and this is about mortgages again. And these are the people, of course, who are now thinking about what's happening now and looking to next year when perhaps their mortgage deals are due to end. So they're not in a position where they can talk to the banks yet. So what are their options if they are due to remortgage, say next spring, and they're sort of looking at this with their head in their hands?
That's a very, very good question from Amir. And a number of people are going to look at what they're going to do with their mortgages next year. I'm one of them. I've got a mortgage rolling off next year, so I'm also going to be having that same conversation with myself. What I would do is go back to your mortgage broker and I would have the conversation about what your options are should you actually wait for the mortgage deal to roll off next year and see what interest rates are then. Should you look at actually taking a new product now? If you did, what sort of product should you look to be taking? It's very much a conversation of questions and answers and questions to be going to and fro the mortgage advisor and the client, based upon which the mortgage advisor should then come back to you and say, well, based on what the conversations are that we've had and your circumstances, I'm going to give you a recommendation, which is, and then you should have some clear advice about what you could do. But definitely a conversation to have or start having now. Don't just wait for next year if you're worried.
And Laura, obviously you're a personal finance expert, Mark is a mortgage advisor. There will be people who don't use either of your services. A lot of people might think it costs a lot of money to go and get financial advice. I don't have, the spare money it's going to cost me. I'm just going to do it myself. Would you say, by and large, in terms of what it costs to get the kind of advice that you are able to offer, it's worth people doing? Or those on a real budget, how can they get this advice free?
So I think there's probably two things there. I would say with something major like your mortgage that can have a massive impact, and you're obviously signing up to a very long-term product, and with the market being as complicated as it is at the moment, I would say using a mortgage broker would be a better idea at the moment. Maybe if you've kind of gone it alone previously and been okay with that, you might want to reconsider this time around. Now, I say that I'm not a mortgage broker. I have nothing to gain from saying that. I just think even myself, I would use a broker in this current market because everything is moving so quickly. There are so many different variables. You're trying to guess what interest rates are going to do. And for some people, using a broker and them finding you a slightly better deal or working out a way to make your mortgage more affordable might really help you out in the longer term and over the term of that mortgage. But to your other point, if we kind of move away from mortgages and think more broadly about wider personal finances, so things like savings and investing, there's so many resources out there now for people who want to do it themselves and want to go it alone and don't want to pay a professional. And I think that's fine. You can go out and do your research. Obviously, like anything, if you're doing it yourself, it's going to take longer and it's going to be more work on your part, and you're going to have to kind of navigate that system. But it's perfectly doable, and there's so much help and resource out there, particularly at the moment because everyone is focused on making the most from their finances because everything is so expensive at the moment.
Indeed, and I suppose, Mark, that what you would say, obviously you would say it's worth going to a mortgage advisor, but because the cost that the mortgage advisor might cost you, you could maybe save over the course of your mortgage.
And I think if I was looking for a mortgage at the moment in a mortgage market, which is definitely going through some turmoil, I would want to have the comfort of knowing that someone was giving me an advice and a recommendation, not just on what the internet might be telling me to do. I think I would be very, very cautious in this market, and I would want to go and get some quality advice to know that I'm making the right decision. I certainly would feel more comfortable doing it that way. Not all advisors charge. It's up to the individual company what they would charge. You can find an independent advisor, use something like Unbiased. So there are resources out there to help you locate somebody. And yes, if you want to do something direct with the lender, you're perfectly free to do that. The lenders do have direct channels which they will take direct business.
Well, let's return to our two guests who are answering your questions about mortgages, about personal finance in light of what happened on Friday. A lot of you have got lots and lots of questions. Laura, let's return to you first of all. Silver has been in touch. Now, he says, I'm already struggling to pay for the increase in mortgage payments. If the rates increase again, is there any help for people like me? I mean, is there anything like that? Is there any fund? Can you go to the government and say, I used to be able to afford my mortgage, but I can't now? What happens?
So I would assume in this circumstance that they're on a variable rate mortgage, which means that your interest rate goes up as the Bank of England base rate goes up. And those people have obviously seen quite big hikes this year as the base rate has gone up. I think the first thing to say is that you should speak to your mortgage provider if you're in this situation. I think lots of people think if they're struggling to pay their bills, that they don't want to speak to their mortgage provider, and it's better to kind of try and make those payments on their own. But mortgage providers are very aware that lots of people are struggling at the moment. They've been told by the regulator to help out customers, and they have schemes in place to help people. So I think your best first port of call is to go to them and talk about potential solutions there might be. That might be things like having a mortgage holiday where you don't make your payments for a short time, or changing the type of mortgage you're on to reduce your payments, or potentially extending the term of your mortgage, which reduces your monthly payments. I would then say, as a kind of second port of call, anyone in this situation should speak to someone like Citizens Advice, who can look at your finances overall, and they can work out things like whether you might be entitled to any benefits or any local council support or government support, or whether there's anything, any kind of tax breaks you could make use of that you're not currently. And that might help boost your income so that you are more able to make those monthly payments. But I think the main message is it's very easy to kind of bury your head in the sand and think that you'll worry about it later. But we know that costs are only increasing this winter. And so if you're already in this situation, it's definitely better to tackle it head on now, even if that seems quite a scary prospect.
And Mark, just talking about lenders with mortgage holidays, are they pretty universal now, or is it just a very small number of lenders that do that?
Well, what Laura's actually said is very true. The lenders have actually been tasked by the regulator for making sure that they do look at all the options for customers who approach them. I would totally echo what Laura's just said about engaging with your mortgage lender to see what they can actually offer you in terms of help. I would certainly look at things like Citizens Advice, again, independent organisation to help people who feel they're in difficulty. Do go back to your mortgage broker and have the conversation. If you are on a variable rate mortgage, it may be there is potential for you to go into a fixed rate mortgage so that you could actually at least know what your budget is.
Well,
but
actually,
again, that's a conversation to go and have.
Yeah, well, that's one of the questions that we've had. Glenn got in touch. He said, is it worth considering changing to a fixed rate mortgage, bearing in mind the anticipated rise of interest rates? I mean, if you're on a variable rate, if you're on a tracker, Mark, how easy is it to go back to your bank and say, right, I want to switch?
Go back to your bank, go back to your mortgage advisor, have the conversation about the deal that you're on. What your mortgage advisor will do is they'll look at what the product you're on now. They'll look at any early repayment charges that you could potentially be liable for. They'll look at the products available, and they'll have a conversation with you and make an analysis of your own circumstances with a view to recommending the right thing for you. Because what may be right for you may not be right for somebody else. It's very much a one-on-one conversation to go and have, definitely.
Let's maybe widen out a little bit, Laura. We've been talking a lot about mortgages and people with mortgages, but of course, so many people are renting, and a lot of those people that they're renting from will have buy-to-let mortgages. They will also go up. Is the general thought that this is going to mean that rents are going to go up as well, or do we expect that landlords are going to swallow the difference?
I think we're expecting rents to go up as well. We've seen rents already rise this year, and I think if you're a buy-to-let landlord who's seeing their costs dramatically increase, most likely you're going to pass that on in increased rent, even if you're not increasing it by as much as your mortgage has increased by. So I think renters are going to feel the pain of this as those kind of rates trickle down. I think the only people that are going to be immune from this are people that own their property and don't have a mortgage, which obviously doesn't represent that many people out there.
Mark, you obviously look at the housing market the whole time. James got in touch with a question. He says, is this likely to cause the housing market to crash and house prices to drop?
Gosh, I have absolutely no idea what the housing market is going to do. I have no idea what house prices are going to do over the longer term. Nobody can answer these questions at the moment, because really we've had an announcement from the Bank of England. They were going to raise rates on last week to 2.25%. That's where we are today. Lenders are repricing their offerings. Nobody knows where this is going, so forecasting anything to do with the housing market would be no more than fortune telling at this moment in time.
Laura, what about your crystal ball? we've got a question from Josh on a similar subject. He says, I'm in the process of buying my first property. In view of recent events, should I look to pull out and wait until the market settles down?
Gosh, I really feel for Josh. I think buying your first property is so nerve-wracking, and then doing it at a time when there's headlines filled with the prospect of a housing crash and worrying about the fact that you might be buying at the peak. I think this is, like Mark said, an impossible question to answer because we just don't know what housing market's going to do. And if I did, I'd be a much richer person. I think if we talk through some of the logic, I think some people are expecting that if interest rates rise by this much, then not as many people are going to be able to get mortgages. Some people are going to struggle to afford their mortgages and those homes will be repossessed. And that in turn will dampen demand in the housing market. I think that's the logic at the moment that's leading to those headlines and those worries about a house price crash. But like Mark points out, there are so many uncertain things. We've got a new king, we've just got a new prime minister, we've just got a brand new budget and another update coming in November. The markets are very jittery. That's the assumption at this point in time. But if we think how different things were a week or 2 weeks ago, then in a month's time, the situation might be very different, which is a very long-winded way of just echoing what Mark said, which is it's impossible to predict, but I completely feel for Josh and I can't say what I would do in that situation. I think you've just got to think about how long you're planning to buy that property for, whether you're buying it just to make a profit or whether you're buying it because you want to stop renting and you want to own a home of your own, and think about some of your motivations of why you're doing that. I think also just to add, if you're a first-time buyer and you're buying with a very small deposit and you're buying, you're locking in a mortgage now and you're worried about if you're borrowing at your maximum affordability and you're worried about being able to afford that if rates go up, then that is another factor to consider, modelling how you might be able to afford that mortgage if house prices dropped a bit and if mortgage rates went up.
OK, it's a lot to think of. Laura Suter, Head of Personal Finance at AJ Bell, and Mark Saville, Independent Mortgage Advisor at Trusted Financial Advice. Thank you both so much. It seems your main advice is keep calm, try not to panic, and get some proper advice if you can possibly afford it or do a lot of research. Great. Thanks so much, both of you.